you have more investors entering in, new and old. You have the demand of an asset. It starts to outweigh the supply, which causes the prices to increase, right? So it's just like everything in the real world. You got supply and demand with everything. That's what causes prices to go up and down, right? So in the markup phase, you're going to have the demand outweigh the supply.
It becomes more valuable, the asset.
Right. And that's what causes the price to increase and the asset to become more valuable. Now,
and it kind of like magnifies because generally, like retail investors, they generally jump in whenever they see something going up, and when it goes up, then it makes it pump more because more people get on board, more people, and that's when it's like, oh, wait a minute, oh, this Bitcoin thing, this crypto stuff, maybe it is something, that good, but where before they were just like, it's dead kind of thing, it's flat,
right,
and it gets their attention when it starts going up.
And that kind of goes with the second chart that we have with the, you can kind of hear what we're saying and what we're talking about, with the disbelief and the denial and panic and anxiety and stuff like that, the disinterest, and that would be later on in the cycle, But with the markup, it also is affected by the positive news. If you get positive news, whether it be sponsorships and partnerships about certain crypto assets, that causes price increases.
Countries adopting Bitcoin as legal tender, like the last bull run we had.
Right.
Tesla accepting Bitcoin as payments. It's like all positive stuff. And then in the bear market, it's just the opposite. Everything is like, oh, it's a scam. It's this and that.
Right.
It's so crazy.
Yeah, because people don't know when to get in and get out, and stuff like that. But like he said, you'll start noticing the upward trend in the market, which is basically the start of the signaling that the bear market is over and we're about to enter into the next cycle, which the next cycle will be the distribution phase. And I don't know if you want to cover anything as far as the markup phase. You'll start seeing the markets go up and
just other than like, it's grabbing people's attention and they're taking notice to it, it's like, what's going on here type of thing.
Right.
And then they start changing their mind on crypto in general, and they start maybe I should go back in and start buying it type of thing.
Right. They start believing in it, believing in the
and then they start making much stuff. It keeps going up and they start making money, and then it's like they're thrilled and they're excited, and then
I think the biggest thing too about getting off track a little bit, but I think the biggest thing is people don't know how to get out, right? They'll get in and they think
that's euphoria
they
stage.
think stuff goes up forever, and it just can't work like that, right? I mean, nothing goes up forever, nothing goes down forever.
That's probably the biggest problem that the average person has is they don't sell.
They don't know when to get out.
And then when it comes back down, then their portfolio comes all the way back down to where it was, or and then they're like,
I should have got out.
And that's part of what causes part of the cycle. That's what causes that disinterest in flatlines, because they got a still bad taste in their mouth about it. Like, oh, I don't want that.
Because they lost money or whatever the case might be.
Yeah, exactly. That's just, it contributes to the market.
The most important thing when it comes to investing is when you're utilizing your money, right? And you got to know that when you get in, it don't matter if you get in the middle of the bull run or at the bottom of the bull run, right? You still got to know when to get in and when to get out. And that's the most important thing is because a lot of people, even if you know when to get in, like know that we're in phase one, we're in the accumulation phase, well, you just got to set your next goal of, when should I get out?
Yeah.
Should I wait until the next all-time high? Should I wait until it exceeds the all-time high?
And you'll never time it just right at the top or the bottom. I mean, you might get lucky every once in a while or something, but the odds are, you're probably not going to hit it just right. It's like catching a falling knife when it's.
Not to mention, let's say you put $100 on the exchange, right? And say you put it in Bitcoin, just because so many people know about Bitcoin. Okay, so if I put $100 on Bitcoin and it goes up, and next thing you know, I double my money. why are you not taking out and cashing
Because it's
out
so
that?
hard, man. I've been there before.
Yeah.
When you're there, your emotions step in,
Yeah, it's like,
and you
damn,
don't think straight.
this could be $1,000.
And that's where they come up with, you got to take control of your emotions. And that's where you come up with a plan.
Yeah.
And you stick to your plan before
Have
this
goals.
take goals. Because if you don't have a plan and like exit strategy to take profits or when to get out, then you're just going to ride it up. And you're going to be thinking it's never going to go down. It's just going to keep going up and up and up. And then it's going to come back down. And then you're like, well, wait a minute. No, I'm not selling, even though you're in a profit. No, I think it'll go back up again,
Yeah,
and it keeps
right.
coming down. You're like, no, it's
That's
gonna go
when
back up.
That denial.
Yeah, and then you ride it all the way down, thinking that it's gonna go back up, and then it doesn't do it.
And it will eventually.
Yeah,
right. But
you're gonna have to wait a
you
while.
just won't have to. You just don't sell. And that's another talking point right there. Is a lot of people think that when the portfolio starts going down, that they got to sell. Oh, I'm gonna lose everything. Well, no, you're not really gonna lose everything. You missed the train.
You're still
you
gonna
forgot to get off of that train.
Yeah.
You just got to stay on the train, and the next cycle you're gonna get it back. So the goal is to well, not the goal, but the plan is if you miss that exit to get off of the train, if you miss that exit, you just got to wait until it comes back around.
That's a good point too, because that's where people that don't know what they hold and they copy what other people do, they freak out. And then that's the other side of the emotions, where your emotions at the top is like, oh, it's never going to go down. And then when it's going down, it's like, oh my God, I'm an idiot. What have I done? And they sell at a loss because they're scared, because they don't know what they hold. And if they would just wait until the next cycle.
I had a dude said he invested $25,000, and I think it went down like $1,000, $2,000, and he sold it because he was so scared that it was gonna go down to zero.
Yeah, see,
and
exactly.
it's just like, you got to know what you hold. You got to do your research. You can't get into meme coins and have your whole portfolio into these crazy projects that have no meaning and have no value.
Right.
That's where it comes into doing your due diligence.
Like, if you buy the better coins like Bitcoin and Ethereum, you can pretty much you'll know that the next cycle, those
them are the
coins
safer coins.
Right. It's going to go back, and you can hold those, and you'll be okay. Now, if you buy like some coin that's like 20,000 on the list or something, that coin could never come back.
Right. Not every coin is going to have a bull run.
Right.
And not every coin is going to come out of that bear market. Not every one of them. There's 22,000 coins out there now. Me and you talked about this the other day, that most projects have good intentions, right?
Yeah.
Most people have.
Of them, yeah.
Most people that are inventing stuff, creating stuff, even in the real world, people create stuff and invent stuff every day. And the thing about it is, they have good intentions. They're trying to solve a problem or whatever the case may be, but it also is based off of motivation and work ethic, and actually trying to achieve them goals and stuff like that, to where not every one of them is going to be successful, but
they have to survive through the bear market, these coins, and if they don't have that money coming in, and there's so much negativity on the news,
it's hard for them to stay afloat.
That it's hard for them to stay afloat. So if they can survive through it, they're going to be stronger through the next one. And the ones that are really good, they know it's coming, and they will plan for it. Like Gallo, they planned all through for this bear market. Like they planned it all out. I read one article about it before, but so those are the ones that you're gonna feel safer about and stuff.
Because they're just like any other business out there, whether it be Walmart or Dollar General or anything else. These crypto assets and cryptocurrencies are just like a regular business. You know what I mean? Like it's all created by a team of people.
There's
even if whether it's one person or a team of 10 or a team of 50 people, it's still a project that has a goal in mind on when they created it. And like I said, it's just like Walmart, Dollar General, or anything else that Family Dollar.
Now there are some that are like bad in it, that they come in and try to do rug pulls and stuff, that that's going to happen. But for the majority of it, they trying to solve a problem and have real utility.
And that's where it comes to learning and getting into the education, like what we're trying to provide to the people is the education. And again, we're starting from the basics, right? So anybody that's watching, they'll say, oh, well, I already know this information. I already know this or whatever, but you can still learn from every little bit and piece and every
Mm-hmm.
little video that you watch, whatever the case may be. And we're going to get into more advanced stuff. We're just trying
Yeah.
to start from the beginning
Got to build on top of.
and get people that don't have absolutely any clue when it comes to investing and trying to build that financial freedom. We're trying to focus on them, and like I said, starting from the beginning. But
Talking about like people not selling it like the bull run or somewhere in it at the top even or whatever anywhere like and then if they like okay you take the last bull, not this one we just had but the one before,
right,
the all-time high for Bitcoin was like 19 almost 20, I think it was like 19.7 or 8 somewhere around there was the high of the bull run then. Well, where are we sitting at right now? We're sitting over that right now, ain't we?
right, right.
So that just if you held you'd be in profit right now.
If you look at all the market cycles, and me and you've talked about this several times.
There's a similar pattern to all of
It's a
them.
similar pattern, but not only if you go all the way back to 2013, and then you go to 2017, being the all-time high, right,
Yeah.
the top of the bull run, all right, and then so you got the beginning, right, where it's down low, and then you got the all-time high, right. All right, then the next 4 years, this is your bottom now,
Right, exactly.
and this is your all-time high, and it's
Yeah.
never dropped below that,
Right,
type of deal.
It's usually right. It's usually the all-time low is usually right around what the all-time high was the last time or thereabouts.
The previous cycle,
yeah.
right.
And so it's like if
And
the cycle stays the same, you'll
and
be.
it ain't for every coin. We're just showing you about Bitcoin, telling you about Bitcoin, because most everything follows Bitcoin. Bitcoin goes up 9 times out of 10. Most other cryptocurrencies and assets and projects start going up.
And when you're in the cycles, the different parts of it, like when the bull runs over, you don't actually know it until it's already been over. It's
Right.
like, it's because and people are such down and everything, but you look at the charts and you have to get like this confirmation, like or when the bear cycle's over or when it starts. Like it's not immediate. Like you don't look at the chart and be like, well, according to today, we started the bear cycle. No,
Yeah.
it's like a
It
time
fluctuates.
thing. It takes like
you got to
get
look
these
at the
confirmations and stuff.
monthly and the weekly. You got all these different charts to look at, and like what he's saying, that comes into phase 3 of the market, where you'll be entering into the distribution phase. And what that basically is like what he was saying with the with people not knowing how to get out, and you're not gonna know when the bear market's or when the bull run's over with, right? You're not gonna know. So what happens is during the distribution phase is buyers start becoming the sellers, trying to lock in their profits of the market and everything like that. So it's basically a standoff between the buyers and the sellers. And,
like the bears.
and you got some people that feel like the bull run is still going on strong, like you were saying, is you don't know when to exit, so you still have buyers that's like, no, it's gonna go up forever, or even maybe it's new investors, new investors.
Usually it's the ones that are new to it and don't understand it. Like,
oh man, let's buy this, let's buy that, and then next thing you know, because they think the market's gonna keep on going up, and they don't realize that. Well, we're in this cycle right here, so it's not going to go up forever. You know what I mean?
And there's nothing wrong with taking profits, whether if it's $1 or $100,000, you're still taking profits.
Take profit every chance that you can.
Better than taking a loss.
Right.
So there's nothing wrong. So you sell at a certain price, and then the price, say it pumps up even higher again, than where you sold, and you can't be sad about it. You can't be like, oh man, I should have waited, because you still took profit.
Yeah, right.
And nobody has a crystal ball. Nobody knows what it's going to go to.
So every little trade that you make a little bit off of is still a win.
Yeah,
because
exactly.
you made something off of it. A lot of people don't realize that, and I've made mistakes myself. I'm sure he has too, where we're trying to, oh man, this thing's gonna keep on going, and it start falling down. But that's where, again, like he said at the beginning of the video, is you got to leave them emotions out of it, and you got to capitalize every chance that you get to capitalize. You got to take it, right? And
setting that exit strategy in place, whether you set like you want to take profit at 10%, 50, or whatever, or if then there's different strategies on that too. Like you can sell out, at different levels and stuff, or you can sell out all at once if you want to. But if you sell a little bit here and here and here, and if it does drop, you've already made a lot of money off of here, and you're not waiting. But if it does keep going up, you can sell more. But if you sell everything here, and it goes up, you kind of missed
Right.
out right there. So you sell a little bit, a little bit, a little
A lot
bit.
of people
It's a good
think they
strategy.
gonna try to turn $1 into $1,000 or something like
They
that.
hear
you know?
stories.
And I'm not saying it can't be done, but them are them high risk, high reward.
Yeah,
Because you got
right.
different types of cryptocurrencies out there. You know, like Shiba Inu, for example, it's a high risk, but it has high reward. You know, so if you're a gambler and you like that type of, that stress and
Yeah.
anxiety to go along with that, because
Right.
like if you throw $1,000 on Shiba and it starts going down
You can
real
lose
quick,
it.
like it could go down quick. You know what I
Mhm.
mean? Not to mention it's a meme coin, right? So there's no real utility. It has, I would say that it's better than other meme coins, right?
Yeah.
But
right.
it's still a meme coin at
Still,
best.
yeah, right.
There's nothing that is trying to solve
that's
no
where,
problem,
like-
but you can make a killing on it.
Yeah, and that's where you diversify. So you can
Right.
like be split up in your safer coins like Bitcoin, Ethereum, Avalanche, stuff like that. And then they're lower risk, and then you can take and put it in like, Shiba or whatever, that's more risky. And then if that does go down or something, then you didn't lose everything you had,
You ain't
because
lose
these are
everything.
going to go up. You're going to make up for it or whatever. So putting all your eggs in one basket is pretty risky.
That's the saying right there. I was about to say that.
That's pretty bad. I mean, it's
Yeah.
pretty scary.
Can't put all your eggs in one basket. I mean, that's
But the
simplest term.
the nice thing and the beautiful thing about cryptocurrency, and this is probably going to change one day, is that you're basically, your portfolio is either going to go up everything or down pretty much, because everything follows Bitcoin.
Right.
And when it goes up, then all the other coins are basically going up, and you'll have like an alt season and stuff. Whereas if you're in the stock market, you have stocks everywhere or whatever. Then there's not one leading everything.
Yeah,
and you
right.
got stuff like this.
It's all based on
So
the
you're gonna
company
make
or
a
the
lot of
business.
money if everything goes up, Bitcoin goes up, because everything follows it.
Everything
And that's
follows.
nice, right?
Yeah.
I mean, it's predictable. It's very predictable.
And Bitcoin is here to stay, right? I mean,
It's
people
not
can
going anywhere.
speculate and stuff like that all they want to, but it's the first of its kind, and it's been out the longest, and it actually has what they call it. They utilize it as basically almost like gold. It's
store
a store
value
type of
yeah,
coin,
right.
and it's utilized worldwide too. And not to mention, they've already done so much that if you really think about it, Bitcoin will not go nowhere, right? Like there may be some negative
It's too
people
big
out
to
there,
stop.
but it's already too late to stop Bitcoin.
Yeah, they
It's
would have
just
had to
too late.
dip in the bud a long time ago when it first.
I mean,
came
they
out,
got
I would think.
Bitcoin ATMs, Bitcoin being legal tender.
Worldwide,
and-
legal
yeah,
tender.
right.
Yeah,
So,
right.
there just ain't no stopping that now. And then, so not to mention, the more that it decreases because it's a deflationary coin,
Yeah, you got.
I mean, it's just gonna be nuts in the next, in the next, what, I'd say let's say 5 to 10 years. I mean, there's no telling where Bitcoin's gonna be.
Oh,
At.
and
It could
some-
be over
some people-
$100,000.
Some people are saying that like by 2030 it'll be $1 million.
I mean,
I'm talking about people that are like know what they're talking about.
Yeah.
Like Kathy Wood.
And it ain't something that's out of the world or something that's that ain't
Not possible.
Not possible, right? Because
Right.
it's deflationary, and you got to think of, just like we mentioned last video, if you got one item, you can sell it for whatever you want to. But if you got
Yeah.
1,000,000 of them items or unlimited supply of them items, you can't really put a price
There's,
on it, right? So Bitcoin is there is not
I mean, think
an
how many,
unlimited supply of Bitcoin.
how many people are on the planet? Is it like 6-7 billion or something like that?
That's a bunch.
and there's only 21 million Bitcoin ever. I mean,
Ever.
there's not enough
There
for
ain't
one
even-
of each person. Like, you know what I mean? And then you got
You'll
all
have that in the state of Texas.
Yeah, exactly.
You know what I mean?
And there's not even enough. I mean, there's like millions that have been lost. Too.
So the
Like
demand-
5 million, 6 million, something like that.
Yeah.
There's even missing. They'll never be found again, probably. So that even
And
lowers
that's-
it more.
And that's where demand for an
Yeah.
asset comes into play, where Bitcoin is just going to go way on up there.
It's pretty much unstoppable. Especially with the cycle, the way it works is, the halving. I don't know if you want to get into that yet a little bit. So
No.
but that's really a big
Yeah.
part of the cycle. It keeps it on schedule, and that's where you get the highs and the lows, is because
Yeah.
of the Bitcoin halving.
Because of the
Because
halving,
it-
that's what basically started the 4-year cycle, and the experts, being able to find that trend, that 4-year
Yeah,
trend.
so your cycles are like 4 years, right? And your halving is every 4 years.
Yeah.
I mean, so that's what causes it basically, where
Yeah.
it cuts the supply in half. And then usually what it is about a year after the halving. That's according to history on all the other cycles that we've had,
Mhm.
and it's been consistent. It's rhymed to it. Is that that's when it reaches its all-time high? Is about
Right.
a year after that halving.
And
takes place.
that goes from your second or your first phase being accumulation
Yeah, yeah,
to your second phase
right.
being the markup.
Mhm.
And that's what you're saying is
And-
the halving is basically right there at the end of the bear run, and it hits that, and then next thing you know, it's the
Well, it's
accumulation
usually like-
phase, and then it goes
It's
up
usually like
to
the bear run is like a little over a year or so, and it pretty much goes flat and sideways, and then once it starts coming up, and then you get in that one phase where
markup.
markup
Mhm.
phase, and then that'll be coming up, and then the halving usually kicks in after that starts up, and then it's usually what happens too is like when the halving actually takes place, the day that it hits, Bitcoin will like pump, and then it'll crash, it'll come down because people are taking profits.
Right.
Stuff
right,
in it,
yeah,
and then it come back up slowly, and then but then at that point, that's when she really kicks in.
yeah. It goes parabolic.
Goes parabolic, exactly.
Yeah, right.
Yeah, and and the higher it goes, the more people feel like FOMO, fear
And then
of missing out.
and eventually people's gonna start cashing in, right? They're
Yeah.
gonna start taking their profits, and that's basically we'll get into the next phase, which is phase 3, the distribution phase, and the distribution phase is basically the first sign of weakness weakness from the bull market, right?
Yeah,
And buyers start becoming sellers at some point, right? As we mentioned before, is buyers start trying to lock in their profits.
and usually it's the institutions that are doing that. They've got retail to pump it up, throw their money in there, right? And got the price up real high because the institutions have been buying in the accumulation, right?
yeah,
Real cheap. They're getting everything real cheap, and then they'll get once retail kicks in and stuff, and then they'll stop putting it in, right? And then the Bitcoin will go up or whatever they're accumulating, and then so retail gets in, fills it up, makes the price shoot high, it goes parabolic, and that's when the institutions make their money because they're cashing out and taking the retail monies out
right.
out of it like that right there, and that's how it is. I mean,
And so again, the buyers start becoming sellers. At some point in time, you're going to want to cash out, and the smart investors, like you said, they're going to know when to take their profit and stuff like that. And basically, they believe, and then you have some investors that believe the bull run is still going strong
Yeah.
or whatever, and
Yeah.
that the prices are still going to go up. So, and needless to say, what happens is the buyers and sellers have a standoff until one of them breaks, right? Like
they're fighting each other.
They're
Yeah.
fighting each other, and it's a standoff. So they're trying to figure out, the market's trying to figure out which way to go and stuff like that.
Right.
And they're at a standstill. The market's just, until one of them gives in.
That's really good way to put it. Yeah.
And basically, so you'll still have the high trading volume and stuff like that, people buying and selling and stuff, right?
Right.
Because that causes high volume. But you'll see very little price movement when that happens. And then the next thing that happens is you got that fear and greed of what's going to happen in the market because you're at a standoff. You're at a standstill. The market's just going sideways. You're at the all-time high. You're at the top of the market. And again, like I said, you're at that standoff. So now you got that fear and that greed, and it causes uncertainty of what's going to happen, what's next. So then next thing you know, more and more selling pressure starts to happen.
Yeah.
And then people starting to sell more and more because, I think we're at the top. And then that's what causes the downward trend. Because,
Man, and I tell you what, there's so many people that they get in late and they buy at the top because they think it's never going to stop going. Everybody, like, they hear these people making all this money and they FOMO, fear of missing out, and they will get in at the top, and they're usually the ones that are going to sell at the bottom, you know what I'm saying, and take a loss on it. That's just the way it is because they're new to it, and then they're like, man, I bought it at $70,000 Bitcoin, and now, it's 20,000, kind of thing. And that's, I mean, in reality, that's what really happens, to a lot of people and stuff, and they get burned on it and stuff. But yeah, But if they knew what they was doing before they jump in, that's where your research and your due diligence
Yeah.
and all that stuff steps in, you know.
And just
And
understanding
patience.
all the different aspects of the market because at the end of the day, if you're an investor and you're trying to make money, you're trying to get a return on that investment,
Yeah.
right? So you're trying to make money, and you can't always win, but if you study and research and learn what you're getting into and getting involved in, I mean, because it don't matter what you do, even whether you're flipping cars or whether you're
Yeah.
getting into real estate or if you're getting into a restaurant, fast food business, whatever the case may be, you still got to understand like what that market is, the people that you're trying to reach, the potential buyers and everything like that. You ain't gonna make money by just I'm gonna just create this business and you know it's just gonna
Right.
take off. It ain't gonna work
Like
like
with
that.
this, what we're covering right now. I mean, if you don't know this stuff, you're gonna get burned.
You're gonna
I
get
mean, the
burned.
chances are, if you don't know how the cycles work, when you know, and you're gonna buy it at the wrong time, you're gonna sell it at the wrong time.
And I think that's one of the most important things
Yes.
in being an investor is knowing understanding the markets and how the markets work, right?
That, was it Jimmy Buffett or I believe one of them
Warren
guys,
Buffett?
Warren Buffett? Yeah, Warren Buffett. He said when the shoe shine boy tells you to buy which stock to buy,
Yeah.
then that's when you sell.
Yeah, right.
And it's so true, you know, because everybody's buying into it, and then the institutions are fixing to sell out and stuff. But it's like you do the opposite of what the masses are doing.
Yeah.
Everybody's buying it like crazy, and it's taking off. That's when you need to start selling,
Right,
Because you know it's
Yeah, and there's so many
the masses lose.
there's so many indicators out there that you can learn, um, and it's simple stuff, right? Like there's a website that you can go to that tells you the index of the market, whether it be fear or greed, and it kind of tells you what the market's trend is on the people, on the investors that's purchasing or selling, what their focus is, whether they fear a downward trend or if they're being greedy, where they're overbuying and they're purchasing a lot of crypto assets and stuff like that. And that same as stocks, you know, or anything, you know. But
like
there's different ways to look at it, and there's different sources that you can go to find out, you know, which method. You just got to be careful, right? You don't want to just look at anything or listen to anything, you know, YouTube videos, TikTok videos. We're not telling y'all to invest. We're just, our main focus of this channel is education and teaching the people what to look for, and, you know, the different types of crypto coins and the valuable coins to look out for and stuff like that. But there's other people that just does it because they're trying to pump their own bags, right? Like celebrities and stuff like that. Like you know,
like
they
like
can
scams and
they can manipulate the market and stuff like that. We don't have that.
You gotta be careful about that. So basically, it's all about timing, when to get in, when to buy, and what price. And the bear market, of course, is a lot of people might not understand it, but is the best time to accumulate.
Right.
And if you you have enough time, because it lasts a while.
And now's the
buy.
time. I mean, you know, if you haven't got in yet, you know, now is definitely the time. I mean, you could have been a little earlier, but at the end of the day, you're still at a good time to get in if you wanted to get in. And even if you know, you don't have a whole lot of money to invest, I believe we covered in our last episode, is, you know, whether it be $50 a week, $100 a week, you know, we invest weekly, you know, that because that comes into dollar cost averaging. And, you know, even if you just putting it on USD, you ain't even got to buy crypto, right? You can just dump USD and have USD coin
ready to go
whenever something comes. And, you know, once you learn and you're ready to get in, you'll have that money there to be able to purchase. And you can put it in USD coin or USD Tether, and certain exchanges
like
allow
coins and
staking and stuff like that.
Yeah.
So
you can be sitting there making a little bit.
You know, you can make a little bit of money while you're waiting to figure out what you want to do with that money. And so that's
true.
always a
and,
thing.
You know, it's been proven that dollar cost averaging is the best strategy out of all of them to make money as far as investing. Like buying every week or however you set it up every day or whatever.
People don't realize that too. Like
and
if you buy Bitcoin at 16,000 and it goes up to 17,000, and you buy it at 17,000, your average is gonna go up, right? So if you invest the same amount of money, and say you got in at 16,000, it goes up to 17,000, and you got in again, bought the purchase the same amount or whatever, your average would be, because of 2 buys, your average now would be like
Yeah.
16,500,
Right.
right? Well, it'd be the same thing when it goes down. If it's 16,000 and it goes down to 15,000, and you invest the same amount, now it's down to 15,500. So, that's the kind of thing that you're looking for
And it's
too,
the-
because when
yeah.
Bitcoin is at, now that your average is at 16,500, when it goes up to say 20,000, now you're
and like right now.
$4,500 above what you got in at.
Yeah, and also like you remember this last year, after BF stuff happened, everything crashed down, and Bitcoin, I think, what did it get down, like 15.5 or somewhere around there? It was somewhere around there. And,
Yeah, it went down below 16,000.
and people were like saying, "Oh no, the bottom's not in. It's gonna go to 10,000,
Yeah.
11."
Yeah.
And a lot of people, they're like, "Well, I'm not buying at 15 because it's gonna go to 11."
Yeah.
It never happened.
Right.
It bottomed out right there.
So you might as well buy in right there.
So they were waiting, and it never happened. So you better,
So you lost out
right? So you better
altogether.
to buy that dollar cost averaging thing, or buy something in, and because it might not go back. It might not
Right.
go down. Now, just think if you bought at 15.5, and now it's like what, 25 or something. That's $10,000 difference right there.
Right,
I mean, that's
right.
crazy, dude.
And
And
now-
you missed out, but at the time you don't see all that. So.
now that would be like if you bought a whole Bitcoin.
Yeah, right.
But you can do the math, and you can do you can kind of see what the percentage is and the difference, because you don't have to buy a whole Bitcoin, right? We want to keep
Right.
stressing that is you don't have to buy a whole coin. You don't have to buy, if Bitcoin's 20 something thousand, you don't have to buy a whole Bitcoin. You can buy partial, called Satoshis. And needless to say is, so if you put $1,000 on Bitcoin and it's 15,000, you have $1,000 worth of Bitcoin. If it goes up 10%, you made 10% off of that $1,000, which
Yeah.
would be $100 bucks.
$100, yeah.
So now you got $1,100 portfolio versus that $1,000. You made $100 off of Bitcoin going up 10%.
And obviously, the more money you threw in it, then you're going to have more money in return
Right.
for that 10% or
Right.
whatever, kind of thing. That's where it's like you're putting more skin in the game and stuff.
Yeah.
But yeah, I mean, and then, it's just like people waited and like, they missed out kind of thing. And I'm telling you, that dollar cost averaging thing, it covers that, it clears that. And it's so easy because you can put $20 a week in there, $10 a week or whatever, and
Yeah.
you can set it up where it's automatic and you don't even have to think about it. It just comes out on a certain time whenever you want it
Which
to.
more advanced traders ain't gonna do that, but
Right.
just getting started, if you want to do that, that's as a matter of fact, we know people at work that do
Yeah.
investing weekly into a certain coin, just because they don't feel like getting on there and looking at the market, looking at
Your
the
fees are going to be higher and stuff
right.
doing it that way.
They're
You're
not
even-
looking at the charts and trying to figure out the best time to get in to have the best.
Yeah, there's basically
return
no
on
set
their
it and forget
investment.
it type thing with that.
Yeah.
You can set that up and just walk away. You ain't got to worry
I
about it.
do set up $500 a week, and it goes into Bitcoin, Polygon, not Matt, but Cardano or XRP or whatever the
Yeah.
case may be.
We try to catch the dip
Yeah.
though with when we buy in every week or whatever.
And not to
Try
mention, it's
catch
a good feeling if you can hit
Oh,
whatever
man,
you
yeah.
predict it to do.
Yeah, it is.
But the next phase that we're going to be discussing is the markdown phase, and that's basically when the prices. It's the scariest phase for investors, for most people. Is when the market is basically on its ride down, and everybody's like, oh, it's going to zero, and this rug pull, and all the FUD that comes with it, and FUD being fear, uncertainty, and doubt. Basically what happens is the supply starts outweighing the demand. So now you have less people that's wanting to purchase crypto, and so the price obviously will start decreasing. And you also got news and negative outlooks,
negativity. And,
just like how on the bottom chart you'll see people starting to have anxiety and fear and stuff like that, and denial and panic, disinterest. It basically is what this phase is but what it basically comes down to is basically your buyers, taking a profit, and it's causing selling pressure in the
Yeah,
market,
yeah,
and people's wanting to basically get out. Now the newbies that get into the market at this phase, um, if you're riding it down, that's where dollar cost averaging comes in,
yeah, yeah.
because you're riding the market down. Whether if it goes up, you're good, you're covered, and if it goes down, you're covered.
And
Right?
in this stage right here, it doesn't show this on here, but it kind of does with this one line here. But there'll be like uh, another pump, and you're already in the markdown, and but people don't realize what stage they're really in at the time until later. You never really know until some time's passed or whatever. But anyways, and there'll be this pump up, and they think that the bull run's starting over again.
Yeah.
And it's kind of like a fake out type thing. You can see right
Yeah,
here.
you'd always
And
got dips, and
yeah, and you'll get one big turn, like back up again. It happened last year, and it usually always happens in every cycle. So even if, like, say you held through it, and then nothing ever falls straight down, and nothing ever goes straight up.
right.
There'll be pumps, dips, and like that. If it's down the road, there'll usually be another time to get out shortly after that, where it'll pump back up. And then you can go ahead and take profits then, and you'll be better than where you were, at where it was right before that or whatever.
Right.
If you're still in profit, depending on where you bought, type of thing. But usually, and when it starts doing that, then people will be like, oh, these people that are, that are really like into it, like, oh man, it's starting over again, because that's what they want, and it'll make it pump even more. But then it'll come back down, and it'll crash real hard then.
Yeah, just because the selling pressure is already there, it don't matter how much people buy and stuff like that. You'll have the negative news. You'll have that selling pressure from people taking their profits and getting out of crypto, getting out of the markets, and all that good stuff.
You'll have like exchanges going down.
Yeah.
You'll have like crypto banks having problems, and then like you'll hear stories like, oh, they're gonna ban crypto in this country, or or whatever. Just people get more scared.
The news
and they
and
sell,
politics.
yeah, which makes more people sell more. That maybe they were gonna hold it through or something, and it just magnifies it and stuff. But yeah, it's all so one-sided according to what part of the market it's in.
And most of the advanced investors and traders, they know that in light of the bear market, there's always light at the end of the tunnel, right? And because the fact of what goes up must come down, and what goes down must go up, or whatever the case may be, it's always gonna be like that. It can't go up forever. It can't go down forever. It's always gonna reverse at one point in time or another.
And really, once you go through the market, like yourself, and you experience it, and you got money in it, and you're tied to it or whatever, like, you don't really understand it until you actually go all the way through the whole cycle.
And that's the biggest thing, is like
experience it for yourself.
Everybody wants to make money. I mean, that's the number one thing that people try to do. Like, they don't try to learn. They just want to go in.
Yeah, they
want to dive head first into something.
They want easy money.
And like even watching YouTube videos, educational videos, a lot of people don't want to do that just because of the simple fact that they ain't telling them how they are making money. What they're doing, or
exactly.
giving out the information and stuff. Because a lot of people want you to pay for information, or subscribe here, or download this, or do this, or pay me $1,500 and I'll tell you, this, whatever. And a lot of people don't want to do, like, you went to school for, the first 17, 18 years, or however long it took you to graduate. And so a lot of people, I feel like, are just so done with educating themselves and trying to learn.
Yeah.
They just want somebody to tell them, how can I make this easy money? How can I get rich? How can I get rich quick? Whatever. It just don't work like that.
They don't want to put the legwork in.
You got to learn. You got to learn what you're doing on anything.
Even your job, like anything,
yeah.
Driving a car, cooking, anything. It's just part of life. Like, and the more you do something, more repetition it is. It's like the better you're going to get at that thing. And it's the same thing with crypto. Same thing with everything in life.
And you can make money in crypto. It don't matter if it's long term, short term, whatever. You can make money. The most important thing is If you know that you got something that's good, even if you miss it, like we said before, don't sell. There ain't no point in you ain't got to take no loss. You're only taking a loss if you sell. That's an automatic loss right there. But if you just hold it, you're good to go.
So one thing I think, since we're talking about cycles, how it works and stuff, would be like how a person can maximize their profits, in a cycle, within a cycle. So me and you talk about this a lot and stuff. So you invest, in the bear cycle. You say you dollar cost average, and then you wait it out, and then you sell toward the top. If you're lucky, you get the top, and then you've turned that into like USD or cash,
right?
And you don't spend it. You don't buy back anything, and you sit and you wait for it to crash back down because it's going to happen.
Mm-hmm.
And then say you sold and you made like one Bitcoin or whatever, and say last time you sold for $70,000, okay, and when Bitcoin was 70,000, you sold
right.
for one,
right,
so you got $70,000, $69,000 sitting there, and you wait patiently for it to come back down.
Yeah.
For Bitcoin to come back down to like 15 when it came down to 15.5.
Yeah, I know.
And then you take that $70,000 and you buy, how many Bitcoin would you buy if it was 15 off of your 70? You'd be like, what, 15, 30, 45? Like
60, 75.
Like
so seven.
Seven
Bitcoin.
So you just turned your one Bitcoin that you sold before into like 7 Bitcoins, right?
Right.
And then basically you're going to wait it out again.
That'd be 5.
Or 5, well 5, I'm sorry, 5 Bitcoin. And you're going to wait it out for the market to go back up again, which this time it's going to go above 70, more likely. It could go to 100,000 or whatever.
Yeah.
And then,
or if it just goes back up to 70, you turn $15,000 investment
exactly
into 5 Bitcoins.
And then
imagine if it goes back to 70,000 and you got
say 100,000. That's $500,000 that you made off of that one thing, and you didn't have to buy anything with any of your money.
You just held.
You just held, and it's all money you made, right?
Right.
The only thing you would have is like your tax stuff, like
capital
gains taxes and stuff like that. That would be the only thing. So basically, you're getting all that for free. And if you do that every single time,
and that's a good point right there, because a lot of people will be so you got investor type deal people, and they will invest in something and they'll get that, they'll make the profit or whatever the case may be. So like what you're saying is they make that they turn that 15,000 into 70,000, right? And then they got that 70,000. Well, what most people do is take that 70,000 and put it back in the bank, and they'll go buy vehicles or houses or whatever the case may be, go on vacation or whatever. They just blow it on other stuff. But then guess what? You're back at square one. That don't make no sense, right? Because why would you want to start back over? Because now you got to figure out where you're at in the cycle and know what coins to purchase.
I could understand if it was like you used it to buy a business, or you bought a house that's going to go up in value, stuff like that. But like just blowing it on stupid stuff.
Yeah. And not to mention, don't take all of it, right? Because even if you had 70,000 and you took 35,000, which would be half of that, and you held, so now you got 35,000 that you took out to spend on whatever you want to spend it on. That's for you to be able to do what you want to because of your time and your research and all that good stuff. You want to go on vacation, whatever. Okay, now you got 35,000. Take out half of it. Keep that other $35,000 in crypto exchange on USD coin, USD tether, whatever the case may be. That way you have it for the next accumulation phase, and where you can start accumulating again. Well, you started at $0 in the accumulation phase last time. Now you got $35,000 to start in the accumulation phase, right?
Yep.
So now you can accumulate more of what you're trying to get into versus starting at 0.
And that is right there entails knowing the markets, knowing
having
how
goals
things work,
and
knowing
a plan.
how the game works, knowing how the system, playing the system is what it is. And like you have to really learn this stuff, and because you can't, in order to do that and watch it crash down and all that stuff, and then man, I don't really want to buy it right now because it's low. You have to understand the concept of it And in order to do that, you basically have to study this stuff and you have to
Yeah.
take it in and it won't even bother you because you know how the thing works,
Yeah.
the whole system works.
Your portfolio
And it makes
go
you
down
strong,
$10,000.
diamond hands, you know, and
Yeah,
stuff.
it ain't nothing.
But if you don't know, like, you don't trust it, you don't trust this, you may know it, but you don't have the faith in it,
yeah,
then you're going to be, like, stressed out all the time and stuff and worried to death, whereas, like,
yeah, they say you don't invest more than you're willing to lose. Now, again, I don't know if we talked about this in a previous video, but I know me and you've talked about it before. Is if I invest $500 a week, well, if I can afford to lose $500 a week, even if it was 100, it don't matter. Whatever you're comfortable with investing weekly. Say I do $500 a week. Well, if I can afford now, once that builds up to say $20,000, yeah, that's a lot of money. But you're willing to throw away $500 a week to invest in yourself.
yeah,
For your portfolio to grow and this, that, and the third. And that's the type of mentality that you got to have is you got to set goals and you got to have a plan, entry, exit plan type of deal, knowing when to get in, knowing when to get out, knowing what cycle you're in, what phase you're in, whatever the case may be. And then now with the whole, like you got $20,000 now because you've been investing $500 a week. You don't want to lose $20,000. So that's where you got to start making sure that your money is in safe hands.
And
right?
also, you know, these things last a long time.
Mm.
Like the bear cycle, you know, we've been in it for a while, and it probably will last until the end of the year, you know.
Yeah.
And well, you know, actually, technically, in the bulls run, because we bottomed out. Once you bottom out and start going, that's really the start of it, but it doesn't go crazy until later.
Yeah.
But anyways, it takes a long time, and people don't have patience, and they don't want to stick with it, and they give up.
Yeah.
And this is the time when you're the accumulation phase, when you that's the time to stick with it, the most important time, and keep buying in and don't give up, because you know if it gets boring. It actually gets boring because a lot of times it just goes sideways and there's nothing in the news and nothing going on, and it's like
that's really where we're at right now.
I think exactly, and I think I'm done with it for a while. You know, I'm gonna, and then you lose interest in it and you go do something else, but maybe buy something else or whatever. But now is the time, the best time to do it, and if you do that, you'll be very glad whenever the thing takes off later.
Oh yeah, because Bitcoin could easily triple, quadruple in price.
Yeah.
By next year, especially with, as y'all can see, the Bitcoin halving. You know, we ain't got but a year and some odd change in there before the next halving. And y'all know, if y'all are advanced crypto knowledgeable investors or whatever the case may be, then you know in over a year that Bitcoin is gonna go parabolic.
Yeah.
And then everything else follows Bitcoin, and you know the prices are gonna start going up in the next year or so.
Yeah, it's gonna be insane.
And it's gonna be crazy.
And there is a possibility of a super cycle too. We haven't ever had a super cycle, but it's possible where it just goes even like longer and higher and everything else. I would like to catch one of those.
I think the average cycle what, like 1,400 days or 1,200.
Yeah.
I think it's something like that.
Right. And the whole way of making money is because of the volatility. Like you buy low, sell high.
Yeah.
Like the more volatile it is, the more money you can make off of it. You know, if it wasn't volatile at all, you couldn't make any money off of it.
Yeah,
like,
right.
You
What's
know?
the purpose?
So it's like a blessing in disguise. It's like the thing that drives people crazy, that they like, oh, I don't like that, it's too risky, is the thing that makes you the money the most.
Yeah.
But that's
a lot of it is people's just so lazy.
Yeah.
and unmotivated to make money.
And it's like once you figure that out, like that's how you make the money, is off of how volatile it is, and you learn. You say, oh, I take advantage of this. This is how it works. Like, and you use it to your advantage instead of like, oh no, I'll stay away from it because it's risky. Once you figure out how it all works, it's just like, you know, you can't go wrong.
And you know, one of my favorite sayings is, "Scared money don't make money."
Yeah, right.
And I'll say that all the time at work. You can't make money if you're scared to spend it. If it's just sitting in your safe or sitting in the bank account, you're not doing nothing. It's not benefiting you not one bit. And you know, me personally, I gamble a lot. You know that, but I'm also in crypto and everything else that I do. As a person, well, I ain't gonna talk about everything, but you know, my ultimate saying is scared money don't make money.
Yeah.
So if you can't afford to lose it, you're scared. You know, it's just gonna sit there. You're fine. You're comfortable. You know, you're happy with the way your life is. You know, but why not chase to have that financial freedom and to
Why
get
not?
out of this,
This is
you
prime
know,
time. Like, this is never crypto's new. This is something like this opportunity has never happened before, like in the history of mankind, until this new technology
yeah,
came out, type of thing. And missing out on it, like people will kick their butt in it, kick their butts one day, type of thing. Because I mean, now's the time to do it. It ain't always going to be like this. I don't think. One day, I think it'll like Bitcoin will bottom out. I mean, not bottom out, but top out, and it won't be so volatile because it is so new. The newer thing that like comes out is it is more volatile
yeah,
because of
right.
that. But as masses come in, the more people get into it,
And
it more
believe in the project
stabilizes.
and
Yeah, it
believe in the
stabilizes
space.
more, and
Yeah,
you'll miss out on that opportunity, type of thing. What I was going to say too was, and like you did this, was so many people, they get so strapped in their bills and they live paycheck to paycheck, and they can't afford to buy crypto. They stress, they got all that. So like paying off, like working on and paying off your bills, like you did and
yeah,
stuff,
right.
and timing it just right. It worked out really good for you too,
Oh, yeah.
because like you eliminate all this and you have that extra money, and then you can put more on it. And
Yeah.
more money, not financial advice, but how you get rich is by the more money you can invest, the more money you're gonna make.
You're gonna return on that investment.
Right. So if you can afford, you find a way to be able to do more investments and stuff.
Yeah,
And
it ain't got to be crypto. We like teaching crypto and educating people about crypto just because it's so new and people don't really understand the technology and the potential that it has in the world. But it's the same as, for example, real estate. Real estate's a real good investment opportunity, right? You can make a killing on that, whether it be leasing or rental properties or even just flipping, where you just purchase a house, fix it up, and sell it. All these different investment opportunities. That's what makes you have that financial freedom and get out of that 9 to 5, build that 24/7 passive income where you're making money every day. And I also like to say, make money. You can't beat making money as you sleep. You know what I mean?
Yeah. Right. Make your money work for you.
Make your money work for you. I mean, it's just
Instead
sitting there anyway.
Instead of you working for money, you make your money work for you.
It's good to have not investment, but it's good to have emergency funds and having money set to the side for if you get laid off at a job, whatever the case may be, or you get fired.
Yeah, because you never
Or you
know.
just say, hey, I'm done. I can't deal with it, boss's ass or whatever. It's time to go. It's good to have it's good to have money set to the side so that you can, be done with whatever you're going through. But you also got to have money set to the side for all this other stuff, whether it be investing, the emergency stuff that we talked about, or for your car. Everybody has a different strategy of
I think it's like
saving money.
At least 3 months is a good number of enough money saved up for emergency to pay your bills for like 3 months or something.
Right.
6 months is better.
Yeah.
But 3 months I would do minimum 3 months.
Yeah.
And then like before you even get into like investing in crypto and stuff, really what you got to do is you got to take care of other things first, because you or any investment really, you need to like have emergency funds set up, and then don't touch it for emergency, obviously. And then first thing is you want to like pay off any kind of credit card, because you're already losing like 24%, like straight off the top, automatically off the credit cards. Monthly. Whereas you'd have to buy something over here and make 24% profit just to be the same as if you're losing over here, type of thing. In reality, Right. So you got to like pick those high credit cards and then stop using them, type of thing too, unless you use them the right way and you pay off every month, for free.
Right. And that's another thing about this channel that's such a good thing, that we chose to do education and teaching and trying to help people learn, is it ain't got to be just on crypto. There's so many other ways that you need to understand and learn to allow yourself to gain that financial freedom and be able to save money and have money. Like you said, getting out of debt. That's probably the number one thing to do. If you got all this unnecessary debt, if you've been maxing out credit cards left and right, and you've been purchasing all these fancy, brand new vehicles or whatever,
toys and stuff, that you don't need.
Look, I'm only 30 years old, and I've already learned. I used to make them same mistakes. It's purchasing all this dumb stuff.
And it's so stressful to live paycheck to paycheck, man. You can't miss work when you're sick, or
or all these depreciating assets that don't make you any money. You buy a car. What's it doing for you besides looks?
It just
besides
gives you point
you're over here. You're trying to impress the next person that you drive by,
and nobody
or whatever.
cares. They see you for 1 second, they forget about you. You never come in their mind again, a stranger.
I used to have I bought a brand new.
They ain't worried about you.
A brand new 2012 Camaro, straight off the showroom floor, straight off the showroom floor. 0 miles, whatever the case may be. And at the end of the day, when you think about it, that car didn't make me no money. It didn't do nothing for me. Like, I couldn't sleep. You can't sleep in no Camaro. You know what I mean? The seats don't go back at all.
Yeah.
And, you can't take no shower in it. It ain't feeding you. It ain't doing nothing for you. It's just a means to go from point A to point B. So why do you have to have something that's not doing nothing for you except getting you from point A to point B? A lot of people look at it like for views. They want to be seen and want to, oh, man. That person right there's got a 2023 really. Corvette, and it's or a Lamborghini, and who cares?
Who cares? Like I don't know that guy. Like I don't give a crap. I got other stuff going on. Why do I care about him?
So that's one thing.
Isn't that the truth right there? And it's like that in society. Like our culture in America is so crappy like that. It's like everybody's so worried about what
the next person thinks,
what they look like. Yeah, and it's shallow instead of worried about things that really matter.
Yeah,
in life and stuff like that. And,
breaking this 9-to-5 lifestyle and system that's set in place for us, and all that good stuff.
And they never get ahead because people they max out, they live beyond their means, and it's like I can afford this, but then they go a little bit more on it, and really spend more than what they really can, and then this car turns into junk, really.
Yeah,
into nothing.
It depreciates as soon as you drive off the lot.
Yeah, and then it's only good for so long, and then you're gonna have to get another one, because it's gonna
depreciating
asset. Fall apart later on and stuff.
A lot of stuff is depreciating asset, and crypto, it has cycles where you can kind of know when that asset is going to depreciate, right? Knowing when you're going to have that markdown phase, and you're going to start entering into the bear market and stuff like that. Versus stuff nowadays, you don't really know what's going to go up in value, what's going to happen day to day.
Yeah.
But I guarantee crypto is going to be here to stay for the long term, because it's the only thing that hasn't been updated in the longest time.
Right. Yeah.
Everything else has been updated. Currency has not. It's the currency's time to shine.
The train has left the station because it's already happening. Look at
already around the world.
Around the world.
A lot of people so small-minded and don't know how to think outside the box, so to speak.
They're too busy.
They think it's only in America. They only think that it's don't nobody know about crypto. Don't nobody care about crypto. Well, I'm gonna tell you like this: if the market is trading over $1 trillion trading volume, that's not nobody not knowing about crypto.
And one day it could pass gold up.
I mean, you think about $1 trillion. That now think we're only $30 something trillion in deficit, which is a high number. I mean,
right.
So, I mean, $1 trillion.
I think what was the market cap in the last bull run? Wasn't it around 2 million or over 2 million for the whole crypto market? I think in the last bull run.
Market?
Yeah, the
whole. You talking about
for crypto?
2 trillion?
Yeah, I think it was over 2 trillion, 2.4 or something like that.
I can't remember, but and that's the other thing. It's all based off of the cycles too. Like the trading volume go up, down.
This is a lot of money.
A lot of money. Massive. People don't understand. $1 trillion. $1 trillion is up there.
And really that ain't nothing compared to what it's gonna be in a few years. It could be 100 trillion. I mean, it could be like the stock market. It's kind of like the new stock market in a way.
And the other thing about it is, what people don't realize, if you're watching in the United States, so the United States can print as much money as they want to.
Oh yeah, I was going to mention that earlier too.
So, and I know we're way off track and we're way past time and all that stuff.
It's all good.
But this is the education part of it is, the U.S. can print as much money as they want to, and crypto cannot be printed
So
unlimited supply.
let me say this though. When the money printer comes on, that's when Bitcoin goes up. It was designed to fight that, because it makes it more valuable. Because the dollar goes down, it takes more dollars to buy Bitcoin. I mean, that's just how it is. The buying power changes.
Yeah.
And that's one reason that it went really good in the last bull run, because we had all that money printing going on with the COVID stuff happening and everything, and they were giving out all those checks. Wasn't relief checks.
Basically, USD didn't matter because they were able to print whatever.
They were and that made Bitcoin go up in more value and stuff. And they're always going to print. They might stop for a little while, but they're always going to turn that sucker back on. And they're fixing. I think they're fixing to turn it on here before too long too, and that's a good sign for Bitcoin,
Yeah, right.
But yeah.
But I mean, USD is just one of them things. Like all currency besides cryptocurrencies can be printed. It don't, whether it be Japanese yen, British pound, USD, all that stuff like that is all printed money, and there is no circulate or there is no total supply. There is no like once we reach this cap, we're done. That's it.
Oh,
it's not like that in the world.
They printed like so much in 2020 and 21. It was like, I mean, we could look it up, but it's like it was like 70% of all the dollars out there was printed, or more than that, or something in those 2 years. That was going on, and that's why we have inflation so bad right now, of course.
Yeah, right.
And but I mean, just insane. There's no limit to
There's
how
no
much
limit.
they
It's
can
unlimited supply of money as long as the United States can print it, or any other country.
I think it was Venezuela, one of the countries. They did it so bad that, I mean, it just destroyed the whole country, because
and Bitcoin would be what, 21 million coins total, and we over here, and so that if you actually think about it and put that in perspective, that's what's insane is the fact that if you can take this asset and print as much of it as you want to, versus something that has a limited supply and it cannot go above that limited supply, which one do you think is going to win that battle?
Oh man, the limited supply one.
The one that's limited supply, because you're going to have more demand for this one versus this one, because anybody can just cut it on, and it's unlimited supply.
And the thing is too, but a lot of people don't understand this. Maybe they do, but it's like there's not 21 million out there yet. It's like, every blockchain reward is, it comes out, but it's like the last one to come out is like 2,130 or something like that. The last Bitcoin is made or whatever.
Right.
And that's what they're having is it's reduced but I think it's up to like, it's way up there, like 18 million or 17 million, and it's already out there because there was so much in the beginning and it slowed down because of the halving and stuff. But basically, it's like the 21 million, it'll be a long time before that is complete. And by the time the last cycle hits for the halving, it's actually going to be half a Bitcoin reward.
Yeah, right.
And I think when it came out, it was like 500 per block reward when it first launched on the blockchain, something like that. And anyway, so 0.5. So can you imagine what that would be worth at that time? So you could basically, I mean, if you had like even like 0.0, like 1 or 0.03, that'd be worth a fortune one day.
Oh,
I mean, we might be dead by then or something. But I mean, seriously, I mean, but I mean, that's like that. You could probably buy a country with that one day.
Oh yeah.
By how, if you consider
as much as everything else goes up in price.
Yeah.
I mean that's the way it's designed. Is the same stuff that's $5 today will be $10 in the next 10 years or whatever.
And they're gonna, I mean, one day the U.S. dollar, it could just disappear because they just printed it out of existence. You know what I mean? And a new system. I mean, that's a lot of people talking about. Well, we won't get into that, but like where the like XRP will be the world currency, or even Bitcoin or something like that. But yeah. Anyways.
Yeah, we done covered a lot of the education part of the day, way longer than what we had originally anticipated.
I mean, there's a lot to it.
There's a lot that goes into the market cycle.
It's like you have to understand certain parts that go along with it too, that are kind of outside the realm a little bit too. So it's hard to cover all that stuff right there. But that's a good episode right there, talking about all that stuff.
Yeah. The next thing we're gonna do in today's episode is talk about the news, and today we have some news about Ethereum, and I'm gonna let Eric take over the news for just a second. I got to use the bathroom.
Okay, so with Ethereum and with all of these blockchains, they're always having upgrades all the time where they have improvements and they're always um, adding and getting better, just like anything. So this news right here is talking about the Ethereum upgrade to implement beacon chain withdrawals, and they're scheduling this for April the 12th, which is coming up pretty quick. And the developers announced that the blockchain is scheduled for the upgrade on April the 12th in 27 days. The upgrade, known as Shanghai Capella upgrade, they have these crazy names that they come up with too, will include the implementation of beacon chain push withdrawals. So they're talking about right here basically being able to get your Ethereum unstaked, which you couldn't possibly do that at the time. This will enable Ethereum network validators to support withdrawal operations following the rule set change. Ethereum withdrawal operations and fee optimization enhancements set to go live in 27 days. Anyway, so the upcoming upgrade called Capella will enable the beacon chain to use push withdrawals as operations through Ethereum Improvement Proposal 4895. According to the EIP 4895 documentation, this will support validator withdrawals from the beacon chain to the EVM via a new system level operation type. Additionally, the summary notes that the EIP 4895's architecture is push-based rather than pull-based, meaning withdrawals must be processed in the execution layer as soon as they're dequeued from the consensus layer. So that's interesting. The latest Ethereum upgrade was originally planned for this month, but the consensus change was postponed. So, in addition to the beacon chain push withdrawals proposal, the upgrade will include the implementation of listen to this EIP 3651, 6049, 3860, and 3855. That's crazy.
I got a bunch of
Usually it's just like one at a time,
Yeah, right.
These enhancements are aimed at optimizing fees. Well, that's nice. Maybe we'll get some lower fees.
Right.
Such as limiting the maximum size of init code and applying an extra gas cost of 2 for every 32 byte chunk into code. That's all that technical stuff. Basically, it's going to try to make those gas fees lower. And one day, gas fees are going to be really, really low once they start getting into sharding and stuff like that. It'll be like those other chains like Avalanche and stuff and Solana, where it's just bare minimum fees and stuff compared to what hundreds of dollars and stuff. But so this is really good news. This is one of those bullish things that you always look forward.
Not to mention they're always trying to improve the blockchain and the network, stuff like that. So that's
these guys work hard, man. They're like working all the time, making these improvements and making it better and better. And
people don't realize that
with Ethereum now, being it's like the biggest layer one and all that, and the first one, and it's got more people using than any other one by a long shot.
Oh yeah.
But at the same time, they got to do it because there's these other chains.
So many people rely on Ethereum.
Yeah, and you've got these other blockchains,
decentralized applications and everything,
cheaper type of thing. That if they don't do it, they'll lose their butts. Everybody will switch out.
So they got to compete with everybody.
Right. So just because they come out first, like we talked about before, isn't always the best thing because it gets passed up by other things. But they're killing it by doing all these things like switching to proof of stake and all that kind of stuff. And it's
kind of another thing is it's kind of like a double-edged sword, right? Because it's like they got to work hard, but at the same time it's like, well, they also being the first one, so many platforms and projects use them.
That's right.
It's kind of hard for them to go anywhere, right? Because they're already there. They have already built that trust. They've already established themselves.
The only thing I would think that they would miss out is if they just stopped doing these improvements.
Yeah, right.
And then they weren't trying to make no effort on it and stuff. Then you would have these companies that are using it, switch to other ones and stuff. I think, but they are top dog, you know what I'm saying?
So when it comes to,
and they're staying competitive by doing this kind of thing and stuff. And it's a slow go because it's a massive ordeal to be able to write these chains and stuff. When they did proof of stake, they switched from proof of work to proof of stake. They considered it the same task as an airplane flying through the air and swapping the motor out while it's flying through the air with another motor.
Wee.
That's what they compared the difficulty of doing this.
The
Because they changed the whole entire system out
Yeah.
with it running,
Right.
like basically, you know.
Yeah.
And that's why it took like years to do it and stuff. But they pulled it off, like they did it, like. And so in order to make it where they had to could do that, because there's so much riding on it, like if it goes down or whatever, and then they have to fix it or whatever, they had to take their time and do it the right way, and it worked. Like they're good, like they're awesome, you know. They're a bunch of nerds and stuff walking around.
Right.
But they got money for it. But yeah, so
That's pretty much
That's-
the news of that
Yeah.
we're gonna cover today, and you know that ain't a whole lot of the news of the day, but
Bear
again,
market.
you know, we kind of, not to mention the bear market, you know, but we kind of went into a long part of the education, which is not a bad thing, because me personally, and I'm sure he feels the same way, is I would rather bring you more education and
definitely
helping y'all understand more about crypto than, you know, the news anyway. But the next part of the show is we're going to talk about coin of the day, and it also ties to Ethereum and you know, helping Ethereum out and why it was
Right.
created. But so it's going to be Polygon, which is another layer 2 scaling solution, which is backed by Binance and Coinbase, and it aims to stimulate the mass adoption of cryptocurrencies by resolving problems of the scalability of many blockchains that they have, and it has it can handle on the upwards of 65,000 over 65,000
Wow.
transactions with an average confirmation time of less than 2 seconds, and that means whenever, if I wanted to send money between me to Eric, it would take less than 2 seconds to transfer that money from my wallet
That's
to
crazy.
his wallet.
And it's cheap too.
Or even if I wanted to transfer from one exchange to another exchange that I owned, same deal. And again, it can handle up to over 65,000 transactions.
Wow.
I mean, that's insane.
That's insane. The only thing that scares me about like using that is you got to really know what you're doing, because you have to.
It can be done so quick.
Well, because like if say you're gonna send Ethereum through like to somebody on this, you have to be able to know how to use that blockchain to get it through that blockchain as a door
Right.
to send it. You know.
Off ramp.
Yeah, like you know, on like whenever you have like normally you send Ethereum to somebody on the Ethereum network.
Yeah,
or
the
whatever.
ERC20
You have to switch
network.
over to this and use the Ethereum network. You have to make sure you go through the right channels
Yeah,
to
right.
make it go that way.
Yeah,
'Cause I lost some coins one time because it was actually my Matic that got messed up. I sent it to Nexo.
Because
and-
there's two different
and-
networks. They
and
have.
I didn't realize that it was
Yeah.
it was
Yeah.
that Nexo was the Polygon network,
Mhm.
and that Coinbase was the
ERC20.
ERC20 Ethereum, and it never showed up.
Mm-hmm.
And I was just like, oh my God, this is, and I waited and waited, and I was like, oh man, they showing up. But not to get off the subject, but and then they got my coins back for me
Yeah,
for
right.
free and everything, and it took a little while to do it. But so that's just something that people need to look out for.
Yeah,
Make sure that you pick the right.
the right network.
Yeah.
Because there's multiple different networks, and Polygon does work off of both networks, being ERC20 and Polygon network. And I believe they started that network in 2019 versus the coin.
like that.
The coin was founded in 2017, but again, it runs on the Ethereum blockchain, and it uses a customized version of what is known as the Plasma network or framework, and which is built on the proof of stake blockchain, and it's a deflationary. It has a deflationary mechanism where it will burn up to 27 million Matic coins, which is not a whole lot considering there's 10 billion total Polygon Matic coins, but it's still something. It makes it more valuable because there's less, like we mentioned about Bitcoin.
When they say burned like that, what are they actually burning coins, or what? How do you?
No, it's just I don't know, like
I sent it to an address without any password that somebody can get into, is what I've always been told. Like like a wallet or something. It goes there, and there's no way if anybody knows how to get into it to pull
Right,
those coins out. Isn't that crazy?
It's just sitting there on the wallet,
Yeah.
and it can't be used for anything.
Yeah.
And you know, they do that, in my opinion, to make, you know, again, make the coin more valuable, because
Yeah.
they're taking it
Deflationary.
from being in circulation to the public, or to the people like us. You know, you can't. There's 27 million Matic that nobody will ever own in their wallets, and so again, there's a fixed supply of, you know, 10 billion minus the 27 million that's going to be burned, and basically it transforms Ethereum into a fully fledged multi-chain system, which is basically the internet of blockchains. Now, another thing about Polygon that's pretty big is all the sponsorships that they have.
Yeah. They've got more than anybody layer 2.
Yeah, right. And they're partnered with DraftKings, which is an app where you can do sports betting. They're partnered with Stripe, which is the money.
Yeah.
The money.
That's a huge
project,
right
or
that's
the money
right
plat chain, and then they
Disney too was
partner with Disney.
I remember when they did that.
Adidas, NFL, football.
Like big companies. Like.
Yeah, big companies. Starbucks, Adobe, and they have more. I think also the what's that called? Bare Naked or Nothing, not Bare Naked, but it's called Nothing brand.
Okay.
And now most of these partnerships are with, you know, Web3 development or NFT marketplace, Web3 payment transaction, and they even have AI, AR, and VR, which is AI being artificial intelligence, VR being virtual reality, and then AR being augmented reality.
That's where you can see both at the same time.
And so they got partnerships with all these different places, focusing on developing all this different stuff. And so, you know, I felt like, you know, Polygon being a good coin, because not to mention they help Ethereum. They solve some of the problems that Ethereum have with the high gas fees and transaction costs and stuff like that.
The first time I heard about Matic Polygon, it was like 3 cents and 2 cents maybe, and I wanted to buy it, but I could not do it because it was so new, and you couldn't get it none of the exchanges in the U.S. had it. It was all like on foreign exchanges and stuff, and by the time I finally got it, it was like 30 cents. And by the time it got listed on like Coinbase and stuff like that,
still a jam up
price
compared to even today.
But see, I got worried about Polygon, and I stopped investing in it because before I got into all this other stuff, because like its main thing that utility was like for Ethereum, the gas fees to be cheaper and stuff. Well, one day Ethereum gas fees are going to be cheap anyways.
Whenever they swap to proof of stake.
My feeling was that Polygon wouldn't be needed anymore for like Ethereum, which could make it where it's not as valuable because it's no longer, you know, but it's okay, I believe, because, you know, it's now they're branching out and they're getting all this AI stuff and different things like that. And I think they saw that coming, probably, the people that are running the show on it, and that's why they may have branched out like that too.
Not to mention, it also helps with decentralized applications, right? So it also makes user friendly, and like they pair with Ethereum, but they plan on having it where it's a user friendly blockchain that can interact with different blockchains, right? It ain't got
almost
to be
like
Ethereum,
Graph or something, almost.
You know. So it has a lot of different, I think, positive things when it comes to what they're doing.
You remember that Matic was the safest coin through the bear market this time? Like it didn't.
It didn't go down as much. I think right now it's almost like it's like a third of its way to its all-time high again already.
Yeah,
and it
was like $1.50 something, like a couple weeks ago or something,
which is like halfway to the all-time high.
But like out of most coins go down 90% or whatever, it was the one out of all the coins, I believe, that it dipped the lowest compared to all the other coins out there and stuff, which is like very bullish. Like, you know,
right.
So
they have a lot of different partnerships and sponsorships that they have, and you know, I'm pretty bullish on it just because of all the different stuff that they are involved in and what they're trying to accomplish. Um,
Yeah,
and they're a pretty hard working team. Um,
they've been
trying
around for a
to,
little while now
yeah, they've
too.
been a while around, you know, over 5 years. So, like I said, you know, founded in 2017 or launched in 2017. So
Yeah,
that's that's right at 6 years, you know,
and
depending
they
on,
keep evolving too.
yeah,
You
right.
know, that's critical to stay in this space that's so changing so quickly all the time, so
Yeah.
competitive that they have to. Like if they don't, they'll be left behind type of thing, and they're doing it. And they're, I believe, I know they were at one time, and I'm pretty sure they still are. They're the biggest layer two, like number one,
I believe so. Yeah.
because yeah, um, at this time, or you know,
They have
which that could get passed up,
they
you
have
know, but
a high market cap. I'll check real quick, but I believe the market cap for Matic right now is 9.9 billion, almost 10
man,
billion market
that's
cap,
insane, dude.
which is real high. They're coming in at ranked number 9. I mean number 8 as far as all coins, all crypto coins. There is
It's number 9 or 8. What'd you say?
number 8.
Oh yeah,
There
well,
is over
top
20.
10 coin.
Yeah, top 10 coins. There's over 22,000 crypto coins. And they're number 8. That's amazing, right? That's insane.
Oh yeah, that's good right there.
And you know, they're right below Cardano, uh, with their market cap, like I said, almost coming in at
Look at the low 0.003. Like
mm,
I mean, if
that
you
would
could
have
have
been
got
insane to
it
get in there
4 years
that time.
ago,
Ooh-wee.
and I mean, and then it went up to what was it?
$2.92.
Yeah. So I mean, if you gotten in right then and then sold, or you know, even right now you'd be in the like
Yeah,
crazy
right.
profit. But if you could have sold it around the top or something, holy cow, dude!
You
And
beat me.
and being number one right now in the in layer two, I mean, it could go up to $10 or something. You know,
Oh,
we
yeah.
don't know, or more or whatever. We really don't know. And
I definitely think that it's going to at least double the all-time high that it previously had.
yeah, I'd
Just
say,
because
yeah,
of all the
easily.
different stuff they're getting into now versus where they was at the beginning. Because like I said, they came out in 2017, so they're fairly new.
Yeah,
You know what I'm saying? So
and
they're
especially
getting more and more involved and getting bigger and bigger and bigger.
especially like the next top of the bull market, you know, kicks in really good and stuff like in a couple of years or whatever.
Mhm.
And Ethereum hasn't reached that their where their gas fees are real low, and then everybody's having to use Polygon still, which
Right.
is more use case and stuff. Where you know it can make it even go up higher then too.
I don't, and you know that's another thing. Like, if you think about it, like people don't really understand the money aspect of it. Like, the market cap of the day, which is all 22,000 coins, it's basically meaning that the total market cap is over $1 trillion,
Like
right?
if you took all those coins and added them up
If you
together,
took everything, the volume,
volume,
of
the-
people spending money
and
on crypto is over 1 trillion,
yeah,
right? Now you have 24-hour trading volume coming in at $62 billion in the past 24 hours.
golly,
$62 billion.
man.
I mean, that's insane. You know what I mean? Like, people don't really
Yeah.
understand the money aspect of it. Like, people, ain't nobody buying crypto. Ain't nobody investing in crypto. $62 billion. This is across the world. This ain't just America.
And this is that's a big one right there. The Bitcoin dominance is like
Yeah.
44.4,
44, almost 44.5%
makes up that much of the
of the market.
market
Because
cap.
and meaning that most people are purchasing crypto, right?
Yeah,
A lot of people are more interested in crypto, purchasing crypto, and that's why they have the dominance, and that's why basically everything follows Bitcoin, as we said before, and because of just so many people,
they feel safer about it.
it's more
safer
because it's a
investment.
store of value
Store
type of
value,
coin.
Yeah, right.
Yeah, so they feel safe and trust Bitcoin, and so that's what they get. And whether they long-term holders or short-term holders, it don't matter. That's what they're purchasing.
Now going back to Matic for just a second, Polygon, same thing. You know, they've got competition now with Optimism.
Mm,
Is a layer two that does the same thing as them,
right.
and it's actually faster than Matic,
Mm.
and I believe cheaper too, because you know it just come out.
It's gonna
like
be the
last
adoption phase,
year.
though.
Right? It just come out last year, and as technology improves, there's always something faster coming out. So
Yeah.
that's you know just how it is type of thing, And
That's where it comes into like new investors, the older generation. You know, it's the same as really, in my opinion, it's the same as everything. Like, I believe Ethereum will be here for the long haul just because they was
oh
number,
yeah,
you know,
I do too.
they've been here for a long time. So even though more coins have come out and newer coins have come out, you
They're so
know,
far ahead of everybody else with
right,
how
like you
many
already got
people
the
are with.
investors, you already got the sponsors, you already got the partnerships that you're still gonna be okay. You're still good
And the one
because
thing it was really lacking was being proof of stake. You know, like Avalanche and Solana, they're all proof of stake, and they already like started out that way
right,
because they're newer. And then now that Ethereum has gotten that, that's game changer. And then once they get the sharding and stuff going and the fees get down, I mean, it's unstoppable at that point.
yeah.
I mean, nothing can come close to it because it's already top number one. And when the technology and the upgrades come in and stuff, I mean, it's just going to be like a lot of people say that Ethereum will flip Bitcoin in
Mm.
market cap,
It
and
would surprise me.
yeah, and that really Ethereum is a better investment
Yeah,
than Bitcoin because it always has higher returns
yeah.
than
Not to mention the value and the utility that
yeah,
comes with it.
exactly. It has, not only like can be like a store value or whatever, but also the utility and stuff like you said. But basically, it's like um, it's so big and it's number two, right? So it's
Hmm.
also it ain't going nowhere either.
Yeah.
It's like it's right there with Bitcoin and stuff, but it has so much higher returns and stuff, and it keeps
You can, yeah,
evolving and
you can multiply your return on your investment a lot more versus Bitcoin. Bitcoin's already, you know, and I've told you this is the reason why I don't really purchase a whole lot of Bitcoin is just because of the return on the
yeah.
investment ain't as high as other coins. Like, say, Ethereum at the price it is now, let's say 1,600, whatever. That means it's still got almost a 3x of your money.
Mm-hmm.
So if you
Mm-hmm.
put $1,000 on Ethereum, you can almost guarantee a 3x on that
Yeah.
versus
Right.
Bitcoin. Now Bitcoin did go up to 60 some
It
thousand,
got like a three
and
X or four, whatever,
Ethereum ain't the best coin to use
but
my analysis as, but like certain coins, like you wanna get in, well Bitcoin can only go up, let's say 3, 4, 5x of your money. You're trying, depending on what type of strategy and
but you know what
goals and plans
you
you
know
got.
what Ethereum's low was in the last cycle in the accumulation phase was like $80,
Yeah.
and it went to $4,800. And then
Ooh,
but
wait.
Bitcoin was like I think it was like 3,000 something the low, and it went to like
Yeah, it was like,
um,
yeah.
3,600, 37, somewhere around there, and then it hit the 69 or
I
whatever.
remember
But
when,
because the COVID hit and
yeah,
it went dropped at one time, they're like, oh, and then it came back up.
right.
But the returns are just more massive on Ethereum. I think Ethereum's probably the safest, best investment you
Yeah,
can make.
exactly.
Personally,
Yeah,
me,
right.
in my opinion, that's just my opinion, of course. But like because it makes you more money, it's safe, and it's with the improvement and switching to proof of stake and all that, like it's gonna be unstoppable.
Right.
It did all those high returns before it switched the whole system over to proof of stake.
Oh yeah.
So you can imagine
What it's gonna
what
do
it's
now?
going to do now the next time if it did so well before it changed the whole system and upgraded the whole darn thing. What it will do. So I'm like super bullish on that.
Yeah.
I mean,
Right.
so I mean, just crazy. But anyways, not that I was trying to talk about another coin, but
Oh no, yeah, you good. I mean that pretty much wraps up today's episode
oh yeah,
anyway. We've been on for a good little while.
that was a good show right there.
Now, just cover what we're gonna be doing next. The next episode is gonna be what to look for in a crypto project. Now we may have mentioned a good bit of that stuff today, but we're gonna get into more depth about it. Be next Monday, right? You want to do Monday?
Should be able to do Monday, yeah.
So we'll be doing another live stream on Monday. And like I said, if you're interested in learning about crypto and getting education about it, we'll be talking about how to get involved in crypto projects or what to look for in that crypto project, what's going to make them valuable, why we feel like it's valuable, all that good stuff. So if you're interested in that, make sure that you hit the notification buttons down below. That way, you'll know when we're live every time. And
Right.
turn it over to Eric.
Yeah, so great show today. We'll do another corner of the day next week, and or next Monday, and maybe we should do if somebody doesn't leave something in the comments, maybe we should do Ethereum because we were just talking about it or something.
Yeah, right.
Maybe,
Yeah, any coin that I feel like any coin that maybe that we invest in, that's what I'd like to stick to. Is stuff that we
yeah,
actually hold and
yeah,
that we think is valuable and we think is
and maybe
great.
why we believe it's
Yeah,
valuable kind of thing too.
Because it makes it easier because we already
know about
we
it
already know
and
about
stuff. Yeah, I think that'd be a good one
yeah.
to cover. So we'll cover that unless y'all leave maybe a request or something. We'll consider but yeah, pretty much wraps up the show. Is there anything you want to add to it?
Yeah, if you don't mind, like the video if you're interested in crypto, for one, because it lets us know how many of y'all are actually potential investors, like the crypto space, understand the crypto space, and supporting our channel, to where we can give out this, it's free, information and free education. Just double tap screen or whatever the case may be, wherever you're watching from.
Takes
and
like
also,
what, 2 seconds, a second to do it.
It takes a second to hit that heart button, yeah, and
it's
then
free.
not to mention subscribe to our channel if you want to be in the know and keep up for whenever we go live. You can get that notification for when we go live. That way you can just click it and it'll take you right over here to us.
Sounds good.
That's pretty much it.
All right, thanks for watching, guys. We'll see you next